and welcome. You're watching Earnings Edge, and clearly, one stock that is in focus in today's day of trade is Bikaji Foods, and that's on the way. The earnings have panned out. We'll be joined by the management as well soon. But let's quickly take a look how markets are panning out at this hour. Overall, if you see in terms of Nifty 50, we are above the 21,900 mark, 21,941, with gains of 0.4% coming in there. Some bit of a recovery happening in Bank Nifty as well, but it's underperforming the benchmark indices. It's the PSU space that is buzzing in trade today. So if you see the PSU Bank Index as well as the PSE Index, smart gains coming in on both these indices. There you go. The PSU Bank Index also near the day's highest levels with gains of 1.3%, and the PSE Index, which is up almost around 3.6% as we speak. Top gainers today, Coal India, 6.5% up move on that one. Tata Motors reacting to numbers. BPCL seeing some smart moves. Cipla is up in trade as well as Power Grid. In fact, when you talk about power, you have NHPC, NTPC, Power Grid, and as well as the SGBN. All your power PSUs which are having a strong run in today's session, and that's mainly on the way. The allocations that have increased in the interim budget. UPL, a 9.5% downtick coming in with regards to UPL, and that's mainly on the way. The numbers have panned out. Clearly, the recovery that we were expected to start seeing from the third quarter, that seems to be getting pushed away as well. And with the UPL, you have a GHCL also which reported numbers, and similar kind of pressures building in there. So there is a downtick coming in with regards to GHCL, 7.5% at the day's lows. Bharti Airtel ahead of numbers is down 2.5%. Bajaj Twins are trading under pressure. Grasim is down. Jio Financial Services is an interesting one along with a Paytm. Let's pull up a Jio Financial Services as well. There you go. 16 to 17% up move coming in on this counter, trading at the day's highest levels. And what's happening is a Paytm's wallet business loss is becoming a gain for a lot of other financial companies. Paytm, there you go, 10% downtick. And you have a LIC that is in focus as well in today's day of trade. In fact, all your life insurance companies which are buzzing. But moving on, Bikaji Foods, that's a stock to look at. Let's pull that one on the screens. If you see in terms of the top line, a 23% growth coming in there. Profits have also improved. Margins have seen an improvement as well on a year-on-year basis. Again, on a highlight basis, the volume growth around 29.5% is what we're looking at. The stock is seeing gains of around 0.9%. To discuss more in terms of what's worked and what is expected to going ahead, Manoj Verma, CEO at Bikaji Foods, as well as Rishabh Jain, CFO at Bikaji Foods, joins in. Welcome to the show, gentlemen.
Thank you very much.
Firstly, Manoj, let me come to you. Overall, from a business perspective, what has worked, what has not worked, and has it met your internal expectations?
So I think overall this quarter has been a very good quarter for us, and numbers speaks louder than for what I say. So a revenue growth of 22.9% and a volume growth of 29% plus, so which is ever highest kind of a growth. But certainly, yes, this is backed by a very good festive season wherein our gifting and foods category did extremely well. In terms of what could have been better is, I think what we felt was there is a rural slowdown in this quarter, what we felt. Also, if you look at in terms of the monsoons, delayed monsoons, which perhaps has impacted this rural business, and also very peak winters and delayed winters. I'm sure you would have read and heard that this is after many years this kind of winters was there. So I think these two factors were little the factors which perhaps would have slowed down things, but overall for us it's been a good quarter, be it the top line or be it the bottom line growth.
Is this something overall this trend will continue, and if so, what's the kind of growth you're looking at in terms of FY24?
So if you look at on a YTD basis, the kind of growth what we have delivered, right? So which is about 14% in terms of value. And in the beginning of the year, the guidance what we gave was about say 16 to 18% kind of a volume growth. I think as an organization we would live up to it and will deliver that kind of a growth. That's what is our expectation. In terms of opening up, yes, the first 15 days of January were again under the acute winter pressures, but things have now picking up, and we're very hopeful for this quarter again.
Right. Rishabh, coming to you, with the growth that we're looking at and the outlook that you have, uh, ROE of around 20%, ROCE of around 27%, is that something which is continuable, or do you think it could be better from here on?
We improved. See, currently we are utilizing close to 46-47% of overall capacity. Our target is to take this to 70-75% utilization in next three and a half years. That's a target we are putting on. In last 2.5 years, we have put up majority of capacity in all of core market as well as focus market. So we have put up capacity. Now it's planned to utilize the same in a more aggressive way. That's what we are doing on. Overall, at the industry level, the category is growing at 10-11%, and we are growing at close to 17-18%. So that's a growth what we are going to be looking at it from volume perspective, and that's what we are targeting on for next year also. For FY25 also, we are targeting close to 16% type of volume, 16 to 18% volume growth. That's what we are looking for.
Right. So, Rishabh, when you talk about capacity expansion as well, between ethnic snacks, packet sweets, western snacks, and papad, where is that expansion going to come into? And two, then how do you expect the revenue mix to change?
So more of basically our capacity target should be growing at around western snacks and namkeen category. That's what we are focusing on, and majority capacity addition is in this two category. And say we set up all the plant in each part of India, be it at Assam or Bihar. So majority addition is in namkeen and western snacks category, and majority of growth will shift toward these two categories. Of course, bhujia is a core, but all the addition is in these two categories.
Okay, and with regards to the capacity expansion as well, how are you funding it, and how much, inputs or funds are going to be required for the same from here on?
So we completed our capex commitment. So till FY24, we completed our capex commitment of we have received a PLI of close to 261 crore rupees, and in which we have committed to Government of India in PLI that we will invest close to 438 crore rupees under capex commitment, and we will complete our capex commitment by FY24. For next 2 years, we will not require majority of fund in capex. It will just be a regular maintenance capex for NPD. That's the commitment. That's the capex we will do.
Okay. Overall, Manoj, if I talk about the outlets, right, 23,000 outlets in Q3, the plan is to reach 2.5 lakh outlets by FY24. Correct me if I'm wrong there. If this happens, and if you're on track to do this, how much revenue addition are you expecting to see?
So, as we've closed this last quarter, so by December, our direct reach has gone up to 2.31 lakh outlets, right? The budget or the target what our sales team are carrying is to reach to 2.5 lakh outlets by end of this year. See, when we add these new accounts, right? So it is not that they're not selling, because, if you talk in terms of reach, we are already available close to 1 million outlets. That's where the presence is if we refer to Nielsen data. What happens is that, when we bring these accounts in our direct reach, so the quality of coverage, is, enhances. So then there's a focus on all products and all that stuff. So it will not be, right to quantify that what each additional account gives. It's also the quality of, coverage. But sum total, if one is to deliver, say, 15% value growth, so I'm sure these expansion is one of a large growth driver to it.
Okay. And overall, my last question coming to you is, what's the visibility that you have with regards to FY25, and two, which segments will be growth drivers?
So as Rishabh said, that the capacities what we have built for ourselves is majorly on namkeens and western snacks. So you will see, higher growth from both these segments or these categories coming in. That's what we look at for next year. And I think overall, now if we look at, so we would be in the same space of about 16 to 18% volume growth in the next year also. That's what is the plan.
Right. So that's with regards to where overall business is concerned and the outlook for FY25. Thank you, Manoj. Thank you, Rishabh, so much for joining us on the show and sharing your views with regards to what's in store. So that's with regards to Bikaji Foods. Let's just pull up a long-term chart as well with regards to Bikaji. Today we're seeing some gains of around 0.8 to 0.9%. But in the last 12 months, 47 to 48% is the kind of returns that we've already seen in 1 year. So that's with regards to Bikaji Foods. But let's quickly slip into a short break. Lots more lined up on the other side. A couple of large trades that have happened. Let's understand what's in store for all those companies. Our research team will be joining us shortly. Welcome back. One stock that is up in trade today is a UCO Bank, 20%, almost an 8-year high that the stock has hit. And this is after two block deals that have happened on the counter. Right now, the stock is seeing gains of 17 to 18%. Now, what is it and why is it that we're seeing this kind of a buzz? My colleague Varsha joins in to get us more. Varsha, what are you picking up with regards to UCO Bank? Because we do see some bit of volume uptick that has happened. And what's in focus here?
So hi Hiral. So as you rightly said, currently it is trading over 18%. Now this is on the back of large trade that has happened, almost 2.43 crores change hands and large trade today. Now buyers and sellers are not known immediately, but there are a few things, interesting things that I want to highlight. If you see the total outstanding shares of this bank is almost 1,196 crore. Now of this, 5% is held by public, which stands at almost 60 crore, while 95% is held by government. Now, if you see on Friday, almost 11.2 crore shares traded, which is almost 20% of public shareholding. And volume of the last 5 days is at 2.5x of its 30-day average. So, considering this as a low free float stock, the demand is really high for this stock, and this is the reason we are seeing, in last 5 days, if you see the stock performance, company has given almost 40% growth to its investors, while in last 1 month, if you see, returns has been almost 43%. Now, this is on the back of earnings which were posted by companies. So total business grew almost 10% year on year and 4% quarter on quarter. Also, gross advances grew by 18% year on year, and company did see improvement on gross NPA and net NPA as well.
Right, so that's with regards to where UCO Bank goes. 17 to 18% is the kind of gains that we're seeing on this one. And if you see in terms of the other banks as well, which are up and about in trade today, you have the likes of a IOB, which is up almost 15 to 16% as we speak. So that's with regards to UCO Bank. But moving on, the power pack is in focus, and I'm specifically talking about the PSU power companies. Overall, if you go to see in the budget, the allocations have gone up, and that's one of the reasons why the pack is buzzing in trade. In fact, NHPC again is in focus on the back of a 0.3% equity deal that exchanged hands. Anushi is standing by to get us more in terms of NHPC as well as the other power companies. Anushi, over to you.
Well, Hiral, as you highlighted, multiple large trade in this counter with about 0.3% equity changing hands. And even if you look at the volumes that are buzzing over at least 3 times its 30-day average now. The stock also did mark its intraday high of about 15% and marked a new fresh live high. So that was at a price of about 115.85 rupees. So as you correctly mentioned, there has been an increase in budgetary allocation for these power PSU companies. If we look at the demand grant increase, that includes an investment in public power enterprises going up about 14% at rupees 67,000 crore now, with now NHPC seeing an increase in its budgetary allocation up about 30% at rupees 11,760 crore compared to 9,006 crore of last year. If you look at Power Grid, that also showed about a 39% uptick, followed by SJVN's 20% uptick. So if you have to pull out the stock performances and check the intraday high of each, you see NHPC and SJVN have done fairly better with about 15 to 19% gains in just these two counters. Even Power Grid was up about 5%. So these are the reasons why the power pack is up today in focus.
Right, so that's the power pack which is up in trade, from NHPC to SJVN to a Power Grid to a NTPC. All of these counters seeing a smart up move in today's day of trade. And in fact, when we spoke to a couple of analysts in the morning as well, they are of the opinion that all the power companies, specifically from the PSU banking space, in spite of the kind of run-up that they've already seen, are still good buying opportunities. Because if you pull up a long-term chart as well, let's just see a one-year chart of all these companies, they will give you the entire story of what's brewing. Can we just have one-year charts? There you go. Almost a 2.7% up move coming in with regards to where NHPC goes. Power Grid as well, almost 78 to 79% is the kind of gains on this one. SJVN is another one, and a NTPC. There you go. NTPC has also doubled in the last 1 year, and a SJVN. That's been a multi-bagger as well. There you go. 5 to 5.2 times is the kind of returns that this stock has given. In fact, similar is the trend with the REC, PFC, as well as the IRDA, which are related to the power space. All these three counters have also seen some smart moves in the last 1 year. But moving from the power space, you have Paytm that is in focus as well. The moves continue. The stock has hit lower circuit for a third straight session. In fact, 20,500 odd crores is nearly what the market cap that has been wiped out so far. Let's head across to Harsh to understand more. Harsh, what are you picking up with regards to Paytm and what should be highlighted from here on?
Well, yes, this story continues to unfold in front of us, Hiral. 20,500 crore wiped out in 3 trading sessions for shareholders of Paytm. Now, first off, I want to try and highlight the deal which has happened earlier today. We had a pre-market deal where 19.5 lakh shares odd were exchanged hands in pre-market. This was a large trade where 0.3% of equity changed hands. Buyers, sellers currently unknown. I also want to flag off one more large trade which happened on Friday with regard to Paytm. Known, of course, but nonetheless important to flag off. 244 crore worth of buying that happened on Paytm. Morgan Stanley Asia has bought P notes. Now that typically will mean that the buyer is actually someone outside of Morgan Stanley, unknown, but Morgan Stanley has enabled that purchase for the buyer because it's P notes, and therefore that's the other block deal which happened, but that happened post market on Friday. So a couple of block deals coming in on Paytm, but nonetheless, without respite, the stock is down another 10% today, which is the lower circuit on the stock. Let me try and break down as to what is causing this anxiety, and we had a Citi note which came today morning after the clarification that Paytm issued with regard to the money laundering charges which have come through and the possible ED directions which could come through. What Citi continues to suggest is they've downgraded Paytm firstly to a sell, target price 550 from 900. What they are suggesting is that adjusted EBITDA, which Paytm suggests will be impacted by 300 to 500 crore. They've revised and they've cut their adjusted EBITDA forecast by 400 crore for the year of FY25 and 600 crore for FY26. For context, adjusted EBITDA for Paytm has come in at 456 crore for 9-month FY24. So they've pretty much wiped out 9 months of adjusted EBITDA for the single year FY25 itself, and probably the full year adjusted EBITDA equivalent of FY24 for FY26. That's what Citi has essentially done. They further lowered their multiple as well, and they are suggesting that there's a heightened regulatory overhang on the stock. Full clarity, they believe, will only come through in the next 1 to 2 quarters. So maybe Q1 FY25 is what they are expecting. And there are a ton of uncertainties which investors will continue to have to face. They are also estimating lower monthly transacting users, which are currently standing at 10 crore at the end of Q3. And they are expecting elevated churn in terms of near-term customers as well as merchants. So they are expecting some migration to start to happen. Extent only to be known in Q1 of FY25. So they're playing wait and watch. Target price completely breached. The stock currently trading sub 440, the lowest levels ever traded by Paytm.
Lowest levels ever traded by Paytm. Thanks, Harsh, for getting us the details and even what brokerages are making out of it as well. Because this is going to be an interesting play, because what happens to their payments wallet and the business, where does it go, is going to be key, taking into consideration the action that the RBI has asked them to take so far. But moving on, UPL, another one which is in focus in today's day of trade, a 52-week low. And this is mainly on the way the earnings have panned out. And you have a couple of and the volumes have been pretty high as well. Mika joins us to tell us more. Mika, what are the volumes telling you, number one, plus the stock performance and anything that you've picked up from the management?
Yes, so the volumes are like more than 6 times the 30-day average, with the sellers being more than twice the buyers, and the percentage of deliverable quantity to the traded quantity was nearly 43% as of 1 p.m. Now the stock is down 10% intraday. It also hit a 52-week low at 482 per share, and the stock has also shown weakness in the past month, down about 16%. The main reason for the fall is the Q3 earnings, which were weak mainly on the pricing pressure and the destocking and the low demand as well. Now the near-term challenges that have been highlighted is the high inventory and the declining agrochem prices, which will later result for a pressure on their balance sheets, which remains a key risk, and this could also lead to a credit rating downgrade. Now management does expect continues to see challenging conditions in Q4 as well, and they expect a low single-digit decline in volumes in the upcoming quarter on a YOY basis, and they expect the margins to be under pressure as certain key markets such as Brazil and inventory destocking, they expect it to continue for the next 2-3 quarters. We also have certain brokerage calls where Citi has maintained its buy rating but reduced its target price from 700 earlier to 650 rupees. Nuvama has a reduced rating and it's decreased the target price from 718 rupees earlier to 486. And lastly, we have Nirmal Bank, which has an accumulate rating, and it's decreased the target price as well from 622 rupees to 568 rupees.
Right. Thank you for getting us the details on that one as well. So this is an interesting one. We're watching out for. GHCL also is trading under pressure on the back of the earnings. But let's quickly take a look at a few of the newsmakers. Unichem Laboratories, the stock is seeing some smart moves. Profits have improved, and if you see in terms of the top line as well, almost a 43% growth. There you go. The report numbers have just been reported. 16% up move coming in terms of where Unichem goes. You have Alembic Pharma, I beg your pardon, has reported numbers as well. In spite of the slight weakness that we've seen on the margin front, profits have risen on this company, and that stock is seeing gains of almost 4.5%. So that's with regards to Alembic Pharma. That's another stock which is buzzing in trade. Apart from that, Coal India is another one which is one of the top gainers as well in today's session, as well as you have a Tata Motors which is seeing some smart moves. So that's with overall markets. But with that, we are completely out of time. Do stay tuned to NDTV Profit. India Market Close coming up next.